First Sunday market update for 2024. My goodness, we're almost 2 weeks in. Well, we are 2 weeks in. It's the 14th, isn't it? I'm glad you could join me. My name's Geoff Pyne, by the way, and I've been trading currencies mainly for the last 17 years, I would think. Yeah, coming on to 17 years this year. So during that time, I've done a whole lot of different things, but I'm going to share with you what currently I do. And that is on Sundays, have a good look at the weekly charts and see what I can find that might be of interest for the upcoming week. So let's get stuck in, shall we? And I'll show you exactly how that works for me. Wonder how your break was, guys. I hope you had a wonderful break. Festive season, all that sort of stuff. If you celebrate Christmas, I hope it was wonderful and joyous and you shared it with your family and had lots of love about the place. Personally, very, very quiet affair, I've got to say. That's not like it was when I was young. Very, very, very different. All right. You should be seeing my charts of the dollar versus the yen, which I didn't really want to show you, but I'll show you shortly. What I do on a Sunday is take a look at the weekly charts, as I said, and I'm lucky enough to have the Actions to Wealth market scanner at my disposal. So that makes it very, very easy. I just click on each of the currency pairs. There are 29 of them in the scanner. And if either or any one of them or multiple number of them suit my eye, then I will mark that and pursue it throughout the week. As you can see in the first half of this, there's absolutely nothing that I have marked, and that's a little bit of a theme this week with what I call weekly or game changer bars. Everyone who hears me say game changer bar asks me what on earth I'm talking about. Well, I'll show you what I'm talking about, but it's not terribly evident this week. The only one I could find that made any sense to me at all was the Kiwi dollar versus the Swissy. Now, I was a massive fan of the Kiwi dollar versus the Swissy last week, I've got to say, and it kind of did what I anticipated, yet it didn't show me a way into the market. And this week, or going into this coming week, it showed me last week's bar, which consisted of a candle bar, whatever, whose low is lower than the previous week, and it closed on or near its high. It didn't close on its high, but it closed near its high. This is typical of what I'm looking for. When I see, here's one here, a candle whose high was higher than the previous week and closed on or near its low, obviously the opposite direction, then I'm looking to trade that short, providing that the master of the whole shebang, and that, of course, being the monthly chart or the primary chart, if you like, is telling me that down is the way to go. And last week, arguable, isn't it? Is down the way to go. Certainly a major trend downwards. You couldn't argue with that on Kiwi versus the Swissy. So for that reason, that candle was tradable, and it did produce a result. This one, however, is going in the opposite direction. Now, the opposite direction is fine as long as you've got a market change. Have we got a market change? We've got a double bottom, certainly do. That's suggesting that we could indeed have a change of direction. Yet, have we got it yet? Argue we've gone into a range, haven't put in a new high, and arguably we're putting in a new low here, certainly equal to that one there. The thing I like about this Kiwi versus the Swissy is that box range there, which is very, very clear. And if you bring that down to a daily chart, you can see how clear that actually is. You've got equal tops up here, if you've got equal bottoms down here. When I see that particular scenario, I'm looking for price to go from the bottom to the top, just like it's done before, and top to bottom, just like it's done before. I can't just go, okay, we're at the bottom, let's enter. That doesn't make any sense to me. I've got to see a reason to believe that we have come off the bottom and we're ready to go long. I don't see that currently. What I do see is another range that has formed after this low. What I would like to see is price give me a false break of the bottom of the range, or what I call a trade line. Most people would recognize that as a trend line anyway. So I'm looking for price to break down here, then sneak back above the trade line and retest it, which would also be a re-entry into the box, if you like. So can I trade it now? Answer no. Am I directionally biased? Yes, I am, and it is to the upside. Now you've got to, and as I go into my my weekly thought process or my weekly analysis, you also got to take into consideration a whole bunch of other things, like what's happening around the world, what data is going to be released, all those sorts of things, and I'll get to that later. But for now, that is the only chart that is showing me a candle or bar whose low is lower than the previous week and closed on or near its high, or the reverse of that, whose candle or bar has a high higher than the previous week and closed on or near its low. So is that it? Do I just stop there and go, oh, that's all I got? There's nothing left. No, I don't, because I do want to have a little bit more opportunity to get into the market than that. So the next thing I do is go to what I call market structures. Actually, I have to change the name for my market structures, because market structures, conventional wisdom would say they're areas of support and resistance, maybe mostly horizontal levels. I treat them entirely different to that. Yes, I use support and resistance, but maybe in a different fashion than you might think. And I'll show you a few examples of those. This is a market structure to me. We've got a double bottom sitting here on Kiwi Swiss, and we've potentially got a higher low, but it's only potential. It's not proven to me yet. And as I said before, that doesn't mean I enter just because it may be a higher low. And then, of course, I've got the second market structure, which agrees with that, being the rectangle or box range, if you like, which is bouncing off the bottom, hopefully, and going towards the top. So I'm just waiting for an entry signal on that. The first one that I noticed when I scanned everything in terms of market structure was, in fact, Aussie versus the Swissy. Now, this is exactly the same as Kiwi versus the Swissy in terms of its market structure. Let me get rid of these lines here. They're very disconcerting. There we go. So we've got a double bottom, and we've got a box range, and we've got a potential higher low. No surprise that the Kiwi and the Aussie versus the Swissy are very, very similar. Why? Because the Aussie and the Kiwi are considered to be risk-off currencies, risk-on currencies, where the Swissy is considered to be a risk-off currency. In other words, if the market sentiment is, okay, let's go, let's charge ahead and buy everything that we can find, then the Aussie and the Kiwi tend to rally. If, however, the opposite applies, then the Aussie and the Kiwi tend not to rally, but to decline. And the Swissy, of course, is the reverse of that. It's considered to be a safe haven currency. And it's certainly been on fire through a lot of this disruption around the world. And are we in a disruptive period at this moment? Well, you could certainly argue that. I could certainly argue that, given what's happening in the Red Sea, an escalation of the Middle East is being flashed all over my news screens. I don't know how far that's escalated. I don't know how much of a problem it's going to be in terms of world events. I've heard that the Panama Canal is dropping in level because of severe drought. So we're going to see potential supply disruptions. What happened when we saw supply disruptions during COVID? You know the answer to that. We saw bad inflation because couldn't get goods to supply. So demand was here, supply was there, and prices went up, 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 up. Are we going to see that continue? I'm not in a position to say yes to that, but my humble opinion is that maybe there's going to be a little bit of a change, if you like, in attitude of institutions like the Fed or central banks around the world, who may be thinking and may have been thinking interest rates cuts. Maybe that's not so much of a pressing thing with all of this going on. Like I said, I'm no economist, no financial expert. I trade currencies, right? But those things are going on in my head. All of those things are computing into how I'm going to approach the week. So Aussie versus the Swissy, exactly the same scenario. Box range. We have had a little bit of a false break to the downside on out of this box, right? So same thing applies. We come back into the box, and I'll just put the bottom of that box in there. If we were to come back into the box and retest that, then I'm happy to trade it long, certainly getting profit in the bank before we hit that high of that box range. So that's on my watch list for that reason. It may take Monday, Tuesday, Wednesday before I even see that possibility. If I see it on a smaller time frame, maybe the 4-hour chart, I could think about it. But it does look to be interesting, given that box range has been broken to the downside. If it were to be re-entered, I think there's probably a trade on there for Aussie versus the Swissy. Aussie versus the dollar is another one. Now, the reason I'm thinking Aussie versus the dollar is because of this scenario. I'll put my pen into action here. Certainly we've got a level across here, and certainly we've got what I know as a descending wedge pattern. Now, a descending wedge pattern tends to break long. The problem I've got with that is we're at the highs. We have pulled back. So if I were to get a nice little reversal pattern here at that level, so in other words, a higher low, then I would be willing to enter here, get some profit in the bank before I hit that level, with the anticipation of the potential for this to break out to the high side. Now, fundamentally, like I said before, with the Middle East situation, that doesn't make any sense. But if I see that technical setup, I will trade it. What I will do is reduce my risk substantially because of the Middle East scenario and the potential for that to switch the market sentiment from risk on to risk off very, very quickly, if we're not there already. And if we're not there, if we are there already into a risk off scenario, then we're going to see this go down, and we won't be even concerned about entering that long. So that's the kind of thing that I've got in my head at the moment. You may say that's very convoluted, but I need to consider it. It's pretty much not based on one thing, how I entered the market. It's based on many, many things. And those two at the moment are very much in my head. Next one is CAD versus the Swiss. Now, I've been trying to trade CAD versus the Swiss long since, well, Adam played fullback for wherever he played fullback. And it's very, very difficult. We managed to trade this one here. But then we hit the highs and bang, came straight back down, broke the range again, retested the range and kept going south. Are we coming back in there? Well, weekly chart wouldn't suggest that. Daily chart, a little bit different. We've got a lovely tweezer bottom sitting there, but is it at a level that I can trust? And the answer to that is, don't really see it. So I'd be taking this on absolute trust if I were to buy this. And I really would need to see a higher high and then a higher low. But it's looking interesting, I'll put it that way. And again, going to the fundamental side of things, CAD's also a risk-on currency. Swissy, as you know, is a risk-off currency. And if the market is to go into that sentimental phase of risk-off, then this long is not a good idea. But it's interesting nonetheless if we were to see a higher low in there. And of course, we do have on the weekly chart that falling wedge scenario, exactly the same as I just pointed out on Aussie versus the Swissy, I think. So you've got this going on. And that's why I'm interested in it, because we're at the bottom of that market structure. And when I see bottom, I'm thinking top, bottom to top, bottom to top. So that's why it's interesting. But as I said, the fundamentals may be playing more of a role than I would like in that particular scenario. We shall see. Next one. What have I got up my sleeve here? Oh, EuroCAD. EuroCAD's interesting. If I can find it, that would be it. EuroCAD's another market structure that suits me because we have this box range in here. Now, I've spoken about box ranges and what I seek to do, or any range, doesn't matter. It could be a circle. I haven't seen one of those, I've got to say. It could be a triangle. It could be a falling wedge. It could be a rising wedge. It could be, as long as it's got a boundary, that's all I'm interested in. Just interested in the boundaries. As long as it's hit something multiple times, I anticipate that it will repeat that until it doesn't. Yippee, you might say. Well, until it doesn't means that it breaks out and continues to run, breaks out and continues to run. And you'll find that you're going to get a sequence of high highs and lows. It'll go to trend, in other words. The thing that I'm most interested in is when this sort of thing happens, or when this sort of thing happens. As soon as we hit the limit, or even go through the limit, when we go through the limit, it's actually more interesting to me than trying to bounce off the bottom. So all I'm looking for, once we do that, once we come back into the box, is look for a higher low or something that I can trade. And of course, I might have to go down to the daily chart, might have to go down to the 4-hour chart to find that. This weekly scenario, like I said from the outset, is to give me an idea as to which direction I think a pair, doesn't matter if it's currency, could be turnips as far as I'm concerned. If they're showing that particular scenario where they're bouncing off the top, bottom, sideways, whatever, don't care. If I can see that unfolding, then that's what I'm looking for. In this case, on Euro versus the CAD, weekly chart showing me that we have bounced off the top yet again, and I'm looking for the bottom. We've gone into a range since that happened. What am I thinking? I'm thinking I haven't got a lower high yet. So do I want to trade it short just now? Probably not. Daily chart showing me the top of a range. What I'd like to see is price do this. Continue to break out to the high side as it's done. So break, retest. If it were to continue to break out the high side and maybe find that level there, that could give me what I'm looking for, which is a lower high in this vicinity. And then I could look, see what I mean, up to here. Give me the resistance. It might be a little bit higher. Anywhere in there is fine for me. I can look to trade the lower high and zoom down a couple of time frames and look for the low. So until that changes, and that changes when this high or these highs, top of the range, is broken and we get a higher high and a higher low. In other words, we go into trend. Until that happens, that's exactly what I'll be looking for. So EuroCAD is exactly in that zone at the moment. Euro pounds is next. Let me just get rid of my pen to start with. Euro versus the pound. Different structure, but exactly the same thing applies. We've got an ascending channel, if you like, on the weekly chart. Bigger picture is telling me that we've been very, very toppy. Oh, but hang on. It's been very, very bottomy as well. So we've got a massive box range in here. And what's happened? Going back to my theory, right? So let's put that box range in for you. So it's about there somewhere, right? I'm not going to argue about little bits and pieces. What's my theory? My theory is if it's come off the top last, it's going to the bottom. It's come off the bottom last, it's going to the top. Well, it's completed the bottom to top, hasn't completed the top to bottom. Doesn't mean it will. It just means that gives me the bias. I have got a lower high. I have got a lower low. I have got another lower high. So what's my thought process? My thought process is we're going to break to this downside here on the monthly chart. Does the weekly agree with that? No, it doesn't. It's telling me bounce off the bottom, looking for a higher low. So this area is of huge interest to me. If we don't get this particular candle this week testing or breaking the bottom of that channel, then I'm long. Only until we hit there, right? We can still trade it short later. Doesn't matter. The daily chart is going to probably give me the best idea of that. So if we, for instance, were to, and we've got a trade line coming through here, if we were to now retest that trade line without coming back above it, then we've got the potential for this to go A, B, C, right down to the bottom there. And that's going to be my focus on the daily chart. If I don't see that, I may see price consolidate here, come back above there, retest it, then I'm happy to go long. That was Euro Pound. Euro Pound classic ranging pair, of course. And that bigger picture thing is very, very clear. So if last come off the top, potentially looking for the bottom on the bigger picture. Next one, only a couple more, and then I've got to show you something else. Euro versus the dollar. Euro versus the dollar has been just amazing for me. Monthly chart, I had anticipated a long time ago that when this got back above that area and gave me a retest of that area, that it would break out to the high side and fill in this range. Hasn't done that yet. Is it going to do that? Maybe, maybe not, don't know. But that structure is now broken down. So I've now got a new structure and I have to be cognizant of what that's telling me. And what that's telling me at the moment is that we've gone in again to a box range in here. And again, we're at the top of that. Again, I'll insert it for you in case you can't see it. And my method of finding these box ranges is finding two equal highs and two equal lows. Now, am I willing to say that they're equal highs? Well, I can use the open close of a bar with the high of a bar. Doesn't matter. If it looks like a duck and it quacks like a duck, it's probably a duck. So to me, that's quite acceptable to have two highs that aren't quite together, if you like. So last time we visited the top here, right? What am I looking for? I'm looking for price to go to the bottom. Can I do that? Well, if I was clever enough and game enough and foolish enough, I probably could have traded that bar right there because there's a reversal bar, unless I had another reason to do that, of course, and I don't see one right now. So same scenario, looking for a lower high, then I can trade it to the bottom. That's why it's interesting to me right now, euro versus the dollar. Pardon me. Kiwi versus the dollar is also interesting to me. And again, we're going back to that risk on, risk off currency pair. Why is that interesting to me? You'll remember on Aussie versus the dollar, and no surprise once again that this is similar. You remember on Aussie versus the dollar, and there was another one too. CAD Swiss was the same. If I draw in what I see once again is a descending wedge, right? which, as I said before, is generally a signal that price will break to the high side. Problem is we're at the high side. But again, what I'd be looking for, exactly the same scenario, is price to come back, find a support level, give me a higher low, and then I can look to trade it to here, but taking profit before I get to that level. In other words, I'm reducing my risk before I hit the resistance. And that's super important to me because I'm very, very, very risk averse, given that I was gung-ho early in my life and lost truckloads of money, not on currencies, but on slow horses. But that gave me the non-taste for risk, if you like. So that's why I trade the way I trade. I'm looking to get profit in the bank before I hit any form of danger. And that's exactly how I would like to play this. Now, the best place, the absolute best place to trade this breakout from is not here. It's here or here. But it may not happen, like it may not happen from there. But the first opportunity that I'm going to have to trade that breakout is going to be from this pullback area. And that's why that one is on the watch list. Hang on a second, I'll just erase all that. Okay. Did I say there was another one? Dollar CAD. Actually, I added dollar yen at the last bit as well. Dollar CAD, I'm already in the long here. And I'm sure you won't be surprised to know I'm in the long because guess what happened? Exactly the same scenario. So equal highs, equal lows, came back into the box, and we got this candle on the weekly chart. What is that candle, guys? A game changer bar. Yes, 100%. Game changer bar. And it changed the game. The game was short. We came back in, or we were at the bottom of the box and looking to come back into the box. And we got that beautiful game changer bar. And I used this as my confluence, this being the horizontal level, right? There's been strong support through here. The market took off once it actually decided that was support. Resistance back here. That was good enough for me to say, okay, this game changer bar is actually the one that we want to trade. Now, very, very keen for this now to give me a second entry by giving me a higher low in here. I'd much prefer to see price go through there for the first day or so of the week, then pull back and hit it. So up here, maybe find that resistance, then come back and hit it. That will effectively give me a higher low, just like it did here, right? Back in the range, higher low. Terrible candle, but you get my drift. So I'll be looking for exactly the same thing. Price up to here, find a bit of resistance, pull back, give me the higher low, then I could trade that long. That would go with the theory that if the market goes risk off, which potentially, fundamentally, it could well do, then this would be a good trade because the dollar is a risk off currency. The Canadian dollar is a risk on currency. The flip side of that may be that oil gets involved and Canada may benefit from that, but go with the strong versus the weak in terms of risk on, risk off. That's what I'd be looking to do. Last one, and I only added this at the last moment, but I couldn't ignore it really because when I looked at the weekly chart, oh my goodness, this could already be setting up. This could already be a trade for the week. I'm not going to call that right now because anything can happen overnight. And when the market opens tomorrow, we could be gapped up, down, or whatever. But this is structurally beautiful in that we've got a massive double top sitting here. We've also got And sometimes you just got to use your imagination just a little bit. I'm going to call that potentially a left shoulder. I'm going to call that potentially a head. And I'm going to call this area potentially a right shoulder. Now, if that's the case, picking this up on the right shoulder would be absolutely ideal. Like I said, I'm reserving judgment on that until tomorrow. I'll see what the market does. But the weekly chart does look sweet for that. Maybe it just needs to go a little bit further. The way I would judge that is this way. I'd look for my parallelogram and I would go, that's the neckline. That's where the shoulder needs to be. So I probably need to go just a little bit higher. And that would probably coincide with that level there, around about 148.70 or something like that. So I wouldn't be willing to trade that really right now, unless I put my stops way up here. I think the better option would be to wait on the daily chart until we get back to that level, say, or near that level, and then let it rip to the short side. Once again, risk on, risk off. That market sentiment needs to be taken into consideration, very, very much so. So where do I finish up, guys? Have I got a result out of all that? They're really the ones I want to share with you because they're the ones that I'm going to be looking for the entire week. Do I think that there's a trade to be had right now? No, I actually don't. But that's why I've shared with you all of those ones that I'm watching. Should they set up the way that I want them to set up, then that's exactly what I'll do. I'll trade them. And that'll be on the daily chart. I'll be looking on the daily chart for those lower highs, the higher lows, or the break back into the range, and maybe retests of those boundaries. So that is my analysis for the week, and that's exactly how I'll be looking to trade. Thank you, Catherine. I'm glad you enjoyed that, and I hope you have gained something from that, and maybe can find a trade or two throughout the week that suits the circumstance. Have a great week ahead, guys, and we look forward to catching up next time I'm in the seat. So bye.